Okay, what's going on, everybody? If you can hear me, please let me know in the comments and we will get going. It was a great week. I am happy with how everything kind of played out. We do, in my opinion, have a nice little answer that we're seeing on the weekly time frame here on the indices. And I think that will be very useful for us moving forward. As always, I've been only doing it about once a week now here on live stream for YouTube and on X, but the rest are in the group Galaxy Trading. I just got partnered with YouTube and they allow the opportunity for memberships now. So that's a thing. And basically, if you're not into Discord or into groups, all of our live sessions will be available in that membership. So I'm just waiting on somebody to let me know you guys can hear me, or I'm talking to myself right now. But I'm going to go through a bunch of my typical names that I would look through. If we have time at the end, I will get to it. Oh, I just got a message that I'm cutting in and out. That's odd. I'm not so sure why that would be. I think it should be okay. Yeah, no charts on there yet, buddy. Okay, so I'm just checking in the group right now to make sure it's all good. Yes, wavelength. Yeah. So I offered an opportunity for those who were in there for free to claim a role, and then I got rid of it. There's too many bots. There's too many people who are impersonating me and doing all that other stuff. And plus, I put out a lot of work, so I'm not just doing that anymore. So I've barely been on X either. I'm kind of just done with it. So all right, so now that I know you guys can hear me, I'm going to get right into it. I'm going to have timestamps on this video so that we can be all good. Let's see. Okay, so I'm just going to do the timestamps and make sure. All right, wavelength, just shoot me a DM on Twitter. We'll take care of it. All right, so let's go over here and make sure we're all set. I need to share screen. Whoops. Okay, present, share screen. All right, now let me pull up the charts. Hope everybody else had a good week. Let's see. So I should be all good now. You guys should all be able to see my screen at this point. Yep, AMD is going to be one that I am going to look at tonight. All right, cool. So let's do this, shrink that, and now we're all good. Okay, so first and foremost, as always, we are going to get into the indices to start us off here. Now, over the last couple of weeks, if we just kind of take a look at it from a wide lens and start on the weekly, as I always do, you'll notice that we really didn't get many answers here on the weekly. What do I mean by that? Following us taking out that all-time high dating back in November of 2021, you'll notice that we haven't created any sort of imbalance, really any sort of setup on this time frame prior to this one. So despite us not forming an imbalance, following us taking out these relative equal weekly lows right here with that move, you'll notice that we created this up close candle, which would be classified as a bullish order block. Okay, so following this down close candle, we complete this week with an up close, end up taking out all-time highs yet again, but also painting this bullish order block. So that is encouraging for the bulls. Now that is something that you can look towards as a creation of support. If we were to go back in time and look at every single time we've created this type of setup, again, everything should be able to be back tested, right? So here's an opportunity. Here's your bullish order block, down close candle, followed by an up close candle that takes out the open of the previous. Okay. You can also have bearish order blocks, but right now bullish order block because that's what we painted here. Let's continue on. Let's see, have we created any more? Okay, bullish order block, down close candle followed by an up close candle that closed over the previous. Down close candle followed by an up close candle that closes over the open of the previous, and so on. Down close candle, up close, down close candle, up close, down close candle, up close. So are we going to see higher? Well, I think the most enlightening part of us forming this weekly order block to me is just having the idea that, kind of below this area is no good. And at that point, I'd probably anticipate some sort of imbalance to the downside, which ultimately will finally get me to look for lower prices, because again, I'm not really looking for lower prices until I see some sort of bearish imbalance on a weekly time frame. Okay, why do I say that? I've been saying that since January, even here, right? All I wanted to see was a weekly imbalance form, and we didn't, right? We closed it out. So if we were just to go back in time and just look back and see that every time that we do create that weekly imbalance, that typically is the market's way of telling us we are going to go retrace a little bit. Okay, here's an imbalance, bing. Here's an imbalance right here, bing. There's your opportunity, right? Here's an imbalance here. Here's an imbalance here. So, and we can go on throughout, right? Imbalance here, down. So until I see that, to me, there's no reason to look for lower prices. That doesn't necessarily mean if you're scalping something that there can't be a short trade involved, because obviously there can be. I actually went into today with a bearish bias that really didn't kick in until the end of the day, the second half. But that's okay. That is a daily bias, not a going forward bias. In addition to trading, I do like to buy stuff, shares wise, and I actively manage those positions. And, I really personally just don't see a reason to do so until I see some sort of imbalance. I've been in for quite some time. So even if I were to get caught in that imbalance to the downside, I'm very well still green, and that type of move is not going to really damage my position all that much. So that's why I am maintaining that idea that I've had since October. Again, that is a tweet at MandoTrading, and type in "I like this low." If you type that in, you will see my tweet from October. I think it was 25th or 24th, I forget, where I said I like this low a lot, and I gave my reasoning: bullish imbalance right here, discount of our previous range. Okay, bullish breaker. There was a lot of things moving in confluence, and that would lead me to look for higher prices. So that would be on the weekly perspective here. Now let's trim it down to the daily, because that's the way I kind of like to work in, what's the word? I guess a higher time frame, top down type of analysis. To me, that is what gives me the most pinpoint accuracy. And if they don't line up, maybe that's just not something that I trade, right? So if we look at the daily time frame, you'll notice with that low to that high, we have created a new range in a bullish trend. Why a bullish trend? Well, if we were to take out a low, if we were to take out a high, to me, trend is bullish. That would lead to a bullish market structure. If we take out a low, to me, that leads us to a bearish trend or a bearish market structure. Does that mean that we can't retrace down here prior to moving higher? No, absolutely not. That's actually what I would prefer. As anybody who has studied any of the videos that I've put out or anything about my model, that is typically what I like to do. I like to get discount retracements for runs back to highs in bullish structures. And then on the flip side of that, when we do have a bearish structure, I like retracements into discount of that range, and specifically a imbalance in discount. That's the only thing I'll trade off of. And then I like to play it down through lows. So that's literally my model in a nutshell. The second part of my model, I'm going to make a video on it and I will send it out. It's really the 2.0 version. I think I've come up with a name finally, and because it is basically the backwards version of the original Mando model, I think I'm just going to turn it backwards and just name it the backwards name. I don't know how to pronounce it yet. I'll figure something out. But so that would be on the daily, right? Bullish structure. We're not yet in discount, but we did run into this daily bullish imbalance and bounced out of it just to start. Okay. So now on to the hourly, because I want to make sure everything lines up, and that way I can be on sides for a longer period of time. And you'll notice this is what I drew back on Thursday night in our group live session. And, you know, did it work out a little bit? Yeah, it did. But this was the biggest takeaway. And this is the reason why, despite this move higher, I wasn't totally sold. And that's why towards the end of the day, I actually shorted that. So let me zoom in and show you guys what I mean by that, because it might be a little more difficult to see from back there. Okay, and let me just shrink that too. Okay, so if you saw, this is what I drew, and I was very particular with where I wanted price to go, specifically a discount imbalance. Okay, you'll notice, and this happens from time to time, where we have an imbalance above that 50% level, but you would still want a wick to get you down into 50% in that range. And here's the thing: if we were to look at where we bounce out of this, we have not quite gotten into discount yet. Okay, so on this retracement higher here, I was anticipating for price to go lower, and I'll explain to you why again in more detail. So if we were just to look and see, right, our overall wider fractal, or blip in time, here's a bullish structure. Okay, you even have a larger bullish structure within. I'm trying to be a little more aggressive with the current range that I have. This is dating back to the FOMC minute, or FOMC speech in Powell on Wednesday, that we created that up move. So in reality, that plays, right? We never got into discount here whatsoever. Okay, this is a bullish breaker as well. So I have my range set just like this. This is based on our Wednesday candle. Not so sure, but I wanted to be a little more aggressive for that next leg up, knowing that there was a high probability of us painting that weekly bullish order block. Okay, so from this point, you'll notice that upon that retracement, we did not get into discount. So that drives me nuts. But you'll also notice in the process that we took out this low right here. So by doing so, our most recent price run is actually bearish, and it would come from here. Ready? So what was the start of the price run that took out these lows right here? And to me, it would be that high down to this low. Okay, you'll notice bearish breaker, high, low, higher high, price retraces back up into it and rolls over. Okay, so with that, I know price didn't get to 50%, therefore the range is not set. Okay, same situation, price retraces higher, back into the bearish breaker, rejects one more time, no 50% retracement. So now that we get price down here, you'll notice that we finally get our 50% retracement right into the top of the breaker. Okay, so this breaker's filled up. We also wick into that hourly bearish fair value gap in discount of a short-term bearish range. And that's why, again, I was looking for lower prices, and towards the end of today was for that reason. I think, and I would prefer us to go back down to discount of the range. And I think that's where it's going, specifically around this area at the very least. It's only about 100 points lower. So again, I'm not looking for the crash that a lot of people want to talk about for clicks. I'm talking about a simple retracement into discount of an overall bullish range. Okay, there it is. And from that point, I'll be looking long again. That also lines up with our weekly bullish order block right here. And I would go from there. So that's really just my overall forecast idea on NASDAQ. And this also relates very well with SPY. So I didn't even look at SPY at all, but here it is again. The one difference on SPY versus NASDAQ was you actually formed a bullish order block a couple weeks ago right here. Price gets into it and moves higher from that point. And this week we do create a bullish order block, down close candle followed by an up close candle that takes out the open of the previous. So on SPY, a little bit more strong at this point, believe it or not, which was not the case for the majority of last year's bull run. So notice how obviously the weekly range is enormous. So how can we trim this down? How can we be a little bit more precise here? Very similarly here. Look how massive this daily range is, okay? On SPY as well. You'll notice there it is, okay? Here's the catch. You actually have this imbalance here, which is technically in it's in premium of this current range, okay? I just want to confirm one thing. Hold on. Okay, I'm right. Yep. So we just have a massive range currently on SPY. Here's your bullish imbalance, which is in premium of this bullish range. We do still have those relative equal lows here on SPY, those same lows that we took out on NASDAQ and completed. We have left open here on SPY. So that would be 1, differing factor there. And obviously the hourly is going to show you something very similar in that you have a massive range on SPY, where it's not as big on NASDAQ. And honestly, that's really what I'm looking towards anyways as my driving force. So let's just see. Okay. Yep. So again, tonight, if I get a chance, I'll look at some of the names that you guys want to look at. But I'm predominantly going to be looking for setups for myself here. So let's move on over. And the first one I want to go through. Oh, another one. Sorry. Dollar. Dollar. Very important to look at. So here we go. Let's pull this sucker up. And we'll go DXY at the 20-minute mark. All right. So with the dollar, not the most encouraging close for bulls here. I'll explain. So as you'll see, let me just zoom in. Overall, I still believe we're in a bearish structure. Here's your discount retracement. There's your run, not quite to lows. So my model is yet to complete here on the dollar. But let's zoom in, and you're going to notice that last week we actually, going into this week, we had a bearish imbalance right here. We currently ripped through that this week, despite the indices running higher. Okay. So the reason why I value the dollar so much is because when there is correlation between the dollar and NASDAQ, when it's a positive correlation, meaning they're both going in the same direction, that's not great for me. I do not like that. And the reason for it is, and again, this is something you guys can all back test, but when they move together, you're oftentimes going to notice that price action is much more choppy, much more slow, much more untrue, meaning that these imbalances, you'll see large wicks through that, although they may still play properly, you're going to notice that the wicks are almost untradeable. That and what do I mean by untradeable? And untradeable means, like, if you're going into a trade with a legitimate risk management strategy prior to entry, a lot of the times you can get stopped out and still be right, and it really makes you want to rip the hair out of your head. So but anyways, a big week for dollar as well. Now here's the thing, we've already filled this bearish imbalance right here. So if dollar is to move high, and we do get that negative correlation, the one that, really myself and many others would prefer to see in dollar versus the indices, then I would anticipate lower prices on the indices. On the flip side of that, if we are to reject on the dollar, I would anticipate higher prices on the indices. So this, honestly, not ideal for bulls, to me, the way that they closed it this week. But again, is this just telling us that we're probably going to see a choppy next week? That is a possibility. I would not rule that out by any means. And I actually kind of would favor that, to be honest with you. So that is a dollar. That's why I value it. And that's why I think it's so important that I, or anybody really just can cover it and just have ideas of the specific levels that it creates, right? So again, not only is it a good tool for when they're moving in conjunction with one another, because when they do, typically that leads to choppier or snooze fest type days. But on the flip side of that, obviously in a perfect world, they're moving against each other. So you say, okay, how is that valuable? And to me, if I see price moving higher on the dollar, I have levels that I can use, right? It creates its own specific levels. So I could see where it would potentially line up with a move on NASDAQ. And that way I can kind of get out in front of that move, not call tops and bottoms, but be able to anticipate some sort of change in structure following, us running into a higher time frame bearish order block here on dollar, right? So it's all a way for me to be able to, structure ideas with a extra added layer of confidence. So, anyways, now let's go through and we will take a look at Bitcoin. Okay, so Bitcoin, obviously last week with a pullback after it's run through all-time highs. And just for fun, I'll show you guys my little this is my tweet. I don't have it up right now, but you can look for it. Just do BTC and at MandoTrading, you'll be able to see it. But here it is. I forget which one. There's so many to pick here. I think I use Coinbase. Yeah, here it is. Okay. So if we're just to date back to the all-time history of Bitcoin, you will notice that my model has recently been completed. So you have what was the price run that took out this high right here, right? That low to that high. Here is your discount retracement into a bullish imbalance, this time a bullish fair value gap, and a run through highs. My model is complete right here. Now we anticipate what happens next, right? So if we were to kind of reverse it and move on down into a smaller time frame, I would personally like for Bitcoin to retrace down here into 56K. That would be a discount imbalance right there. We do have this imbalance that we're slightly below right now, but the weekly atomic clock here on Bitcoin is a little different based on it operating at all times. So you'll notice, look how perfectly we're holding on to that bullish fair value gap right now. Does this mean that we necessarily have to go down to 50%? No, we could still get expansion from this point. I would just prefer it as a more tradable and for better risk reward type purposes, but it doesn't necessarily have to go lower. I would just prefer it to do so. So, again, I want to see, is there displacement to the upside, or do we see an imbalance to the downside? If there is to be some sort of imbalance to the downside, I would anticipate 50%. Until I see some sort of imbalance to the downside, it really can continue higher at this point. Now that we've had all of our highs taken out, there's no information here, right? So people throwing out targets on Bitcoin, to me, they either are using some magical wizardry where they're predicting prices, or they're just guessing. We don't have any information up here. Price has never been up here, therefore we don't have a clear-cut draw on liquidity to the upside. Okay. And what does that mean? The algorithm that's delivering price is not attacking any specific pool of liquidity up here. Okay. So ultimately, I know it stinks and it is what it is, but this is very similar to NASDAQ. Price will retrace lower when the money that controls markets, the people who have much more money than I do, will decide to pull the plug on it, and we create that imbalance down. And that's why I would take my profits and wait for discount yet again. So that would be Bitcoin. Let's take a look over here and see what we got on. We'll go Tesla next. Okay. Yep. So if you're throwing names out there, I might get to them. I might not. I'm kind of prepping for myself as well. So let me just come on over and see if anybody if you have any questions, I'll answer them. But if you're throwing stocks out there right now, they might have to wait a little bit. All right. So let's see. That was let's say Bitcoin, about 24 minutes in. I don't know. I'm guessing here. All right, so we'll go to Tesla now at 27 minutes in. I'm just doing timestamps. So, all right, Tesla 27. All right, so looking at Tesla here, you'll notice that we are very, very deep in discount, almost dangerously in discount. So from this point, obviously our structure would be bullish despite all of this nasty PA, and of course it has been nasty PA. My only question really at this point is, have we put our foot in the ground here to make a move higher? Okay, I can justify that. I can make an argument for that at the very least. So if we were to take a look over here, this is our daily time frame. You'll notice same range, but within this same range, we've filled every single one of these bullish imbalances on the way higher. Okay, and if you view imbalances or gaps the same way that I would, typically, again, they don't necessarily have to get filled, right? Go back on any chart ever. You're going to notice that there are charts with gaps that are not filled. Okay. But the fact that we have filled each of the imbalances, does this, to me, I'm looking at it from, really, if I'm looking at it from a bullish perspective, I would say to myself, does this mean we're never going to come back down here? We filled every single one of these imbalances. Are we done? Are we taken care of? Maybe that's a question. But if we look all the way down here as well, and even back all the way to our all-time lows over here, we still have gaps down here, right? So that's why this gap's got to fill. It's nonsense. It's not true. But anyways, if you look at any other chart, you'll notice that as well, because you could say, oh, well, I think Tesla's going to zero. And if you think it's going to zero, that's fine. But just by using that idea of how price would paint and leave these imbalances open, you're going to notice that it's on every chart. So if you think Tesla's going down there to fill all those gaps, take a look at Apple. They have gaps down there as well, or Microsoft, or any of the other big names. So unless you think everything's going to zero, it's just not really a fair argument. But so anyways, every one of these imbalances is formed. Everybody probably had a heart attack today with that gap down, and ultimately look where we bounced from on this run here. So we had a bullish volume imbalance, gap higher. We would anticipate that area acting as a support moving forward. We got right to 50% of that level and bounced to close out the day. Here is a bearish volume imbalance. This is one that if you are bullish on that, you kind of want to see that getting taken out with ease. But there are many levels above bearish levels, at least. But that's just my question. Do we put our foot in the ground here, fill every one of these imbalances, or do we need to come on over here and sweep liquidity, get deeper into this bullish imbalance, maybe even fill this prior to moving higher? That's the only question I have. I was trading Tesla options for a while. I've since pivoted from that. I had a couple nice wins. I also had a few losses on it. And at this time, it's either the greatest long of your life or the worst or the quickest stop out to me. But I have no problems owning this for the long term. That's just something where I would rather buy the fear than try and buy it up here, because that's when you can get hurt. That's just my opinion on that overall. So that would be Tesla. Okay, so again, tradable. Really, I'm not thrilled with Tesla until we can close above here, 205. But that's just me. I'm just not sure if it's this low or we need to come back down and make one more low. That's just my biggest question mark. So let's look over at AMD. Let me zoom up and take a look. Great. Okay. So somebody brought up AMD in my comments earlier today. So I was curious about it, and I took a look and I saw, okay, volume imbalance here. That's good. Check. This is like the first time in a really long time that we have not, respected a previous all-time high that we've had after a retracement. So what do I mean by that? Here's your all-time high. There's your respect for that level. There's your breakthrough. Here's where you have the break. There's your retracement. Again, discount on AMD is not until 160.69, which it's not as far away as what a lot of these other names are. So I don't know if that's encouraging or what, but just and again, this imbalance could absolutely shoot price higher. Now, when we look at it from the daily right here, you're going to notice that the daily range is much different than what we currently were working with on the weekly, right? So we took out this high right here with this price run. Okay. Some of you might say, well, what about this right here? And let's just confirm. Hold on. There's our 50% discount retracement into a bullish imbalance. There's your run for highs. Therefore, my model is complete, and that's why I would not use that low. I would use the start of the price run that took out not only this high, but that high as well. And there's your run. Here's your discount retracement into a bullish imbalance. Do we get a situation where we turtle soup, meaning we take out liquidity in the inverse direction of the overall bullish trend that we're seeing on the weekly? That's a possibility, but that would be the level that I'd prefer to see hold. But you do have a bullish imbalance that is not yet completely filled here, with these relative equal lows in liquidity resting there down at 172. So that would be AMD. So let me just come on over to the comments over here. Thank you, Jake Lake, sir. I was hoping you were going to say nonsense TA. That's the real one I want to get. I need Joe back in here. If anybody knows Joe, or Joe, if you're listening, I would love to have you on. Just me and you, we can talk. I won't be mean, I promise. I'm just curious, where your what your strat is and stuff like that. So, but anyways, that would be AMD. Pan W finally got going a little bit this week. Seeker, very nice. So with Pan W, you'll notice that a nasty post earnings dumper. Okay. But despite all of that, you have your low to your high. Here's your discount retracement into a bullish imbalance. And so far, so good. This week, creating a bullish volume imbalance here, right? Also, a name that Pelosi recently picked up that is, is it noteworthy? Is it not? I don't know. I know she doesn't lose very often. So that would be, at least one little caveat to the whole thing. But let's see. Um, but anyways, just going back to the weekly perspective, bullish volume imbalance, that's pretty encouraging. You are dealing with a bearish order block here. So up close candle followed by a down close candle that took out the open of the previous. And with that being said, does that mean that price necessarily cannot get through this? No, it absolutely can. I just wouldn't anticipate it to be a snappy type move. Clearing that order block, I think you could snap a little bit and, even potentially get up into that bearish imbalance, which is at 327. So that's just something I'm looking at. We did take out the low from 2 weeks ago right here with this little turtle soup, right? And ironically, if you were to turn on the dreaded volume indicator, I bet you once we took out that low, you saw a large volume bar. I wonder why. Only few can give me that answer, but I know you can. So anyways, that's PanW on the weekly. Let's just take a look at it on the daily time frame. Obviously here, this is my bullish perspective on it, but if we were just, obviously with this most recent run, it was a bearish run. But with it being a bearish run, that dump, ultimately, again, it's all fractal. Everything about the market is fractal. You can have a short-term bullish run inside a medium-term bearish run, inside an overarching bullish run, inside a larger bearish run, inside, and since the inception of time, a bullish run, right? There's many runs within this market. But here's the thing. What's going to trump all? To me, higher time frame. The higher time frame tends to trump all. And again, this is not made up madness. Just check the pin tweet. That's oftentimes why a lot of the analysis that I do, it does come from the weekly time frame. And while it might take a while for the model to complete, being on sides for a long duration of time, not saying you just I would just buy and then let it sit and let it run. With shares, I don't mind doing that, but when I trade options contracts, it's very difficult to do so. So the way that I look at it there is, if I'm on sides, if I'm on the right side of things here, and ultimately, I think price is going blank, whether it's higher or lower. If I'm on the right side of things for a prolonged period of time, even if that's just scalping, that tends to help out quite a bit. So, but anyways, price run that took out these lows right here, from this high down to that low. We did get up into the 62%, but we got into a weekly bullish imbalance, right? That's the difference. Okay. So even at this point, do we come up, get this high, and then retrace again from that point? There's a possibility of that, of course. But in the short term, a level that I'm looking at least would be this bullish volume imbalance. And we also created a bullish fair value gap. So 2 bullish levels in a row. That's pretty good. And ultimately, to me, at this point, the draw on liquidity is 292.79 at first. And then as we march our way higher, the only untouched bearish imbalance we have here is from 302 to 308 on the daily time frame. So that would be, yeah, if you know, you're right about that. But that would be PanW. All right. So let me just come on over and let's see. I know we need Joe. Oh, you're talking about Pelosi with the money calls. Yep. Yeah. If you know, yes. If you know, you know. All right. Let's see. What do I have next on here? Roblox is all right. Not ideal at the moment to me. I'm kind of holding off, but let's look into video, because it's just an absolute monster. It's a very quick analysis for me. And as you might know, if you've been listening to any of the stuff that I've done over the last, I don't know, while, at this point, this is DNT, or do not touch for me. Can you trade it? of course you can trade it. Is it something that I would prefer to trade? Nope. But it is monstrous, and it's really cool to see. Still frustrated. I missed my discount retracement by a couple bucks on that initial. And as you can see right now, I currently have it just mapped with our overall. If you were to look at it from that smaller time duration here, you'll notice that we had this low to high, discount retracement one more time, run for highs, but not as clean as you would want, because let's go right here. Boom. We took out that high with that run right here, and look how annoying this was. It's part of the game. I know. It's just really, really frustrating. So look where, and I was covering it religiously at this point, but look where NVIDIA bounced, and look where discounted the range is. So that low is 450.10, and discount is 448.89. So it was a goner. Missed it by a tad. It is what it is, but that was a serious run. Again, at this point, for anybody throwing numbers out there, to me, it's just a guessing game at this point. You do have the all-time high, which would be 974. If you believe that's the draw on liquidity, sure. But when you get up here, you do not have information to your left. So it's either magic or a guessing game. But that would be NVIDIA. So that was at about 38 minutes in. I'm just trying to do some timestamps that way. I might not even have time to do it, but I'm going to try and cut up these videos. Yeah, Sean, I know you've been absolutely crushing it on NVIDIA. It's definitely tradable. It's just not something that I'd prefer, just based on, I'm very I don't know if stingy is the word, but strict in terms of, like, especially trading something like this. I would prefer it to be in discount. So I have like a clear draw that I feel like very, very high probability on. I don't know if this goes down, but it's crazy. It's creating a lot of imbalances on the way. So but that would be NVIDIA. Now let's take a look over here at Apple. That would be next up. So Apple, we'll say it's about 42 minutes. So if you're watching this on X, do me a favor, drop a like, share the post. I'm thinking about doing these exclusively on YouTube going forward, but I haven't decided yet. But share it, like it, do whatever. If you're watching on YouTube, feel free to subscribe to the channel, drop a like, do whatever you gotta do. But I appreciate it. So anyways, we'll keep moving here onto Apple. So Apple, bang. All right, so here's Apple on the weekly time frame. You'll notice obviously an ugly week, but where did we bounce? Where did we bounce today? Okay, we're just like Tesla, dangerously deep in discount, but still in discount. You saw that imbalance. Here's a bullish order block. But look what happened when we took out last week's low. So everybody needed the antitrust thing, and then today they magically didn't care anymore. Interesting. But anyways, we swept last week's low after sweeping last week's high earlier on in the week, and are currently got into that bearish imbalance as well prior to rejecting. Now we'll take a look at it on the daily time frame. Personally, again, just by the way I trade, how I use my model, to me, in the situation of Apple, either the deepest discount or the quickest stop out. That's the way I look at it. If I'm going over to the daily time frame here and I look at it from this perspective, this was a bullish volume imbalance, got into that bullish volume imbalance, ran just a tad higher, getting into what would be a bearish volume imbalance. And I'll chart that one out for you guys in a second here. Hold on. Here it is. Okay. Nice. There was our rejection, creating a bearish imbalance here as well. Okay, so also noteworthy, previous sell side rejection. Okay, down here we filled up this bullish volume imbalance on the daily. The way I look at it, again, dangerously close. This is a very important place to move for Apple, in my opinion. Okay, we've, just like Tesla, gotten to every single one of our daily imbalances that we filled, and so far we've made the up move. Prior to, obviously, what was it, Thursday's dump, but from our lows we're still higher. But that would be Apple. Not the most ideal trade setup for me, though. So deep in discount, but again, I'm just not as sold with Apple, to be honest with you. I think there's better things, but okay, so let's go over here and we'll take a look and see. Yeah, that's what everybody says. It's much better on YouTube. No, I will not shout out your crypto coin here. Okay, so a penny stock. Yeah, I actually saw something about that. I have it on the bottom bar right now. It had a poor week. I believe it's over $5, if I'm not mistaken. No, I'm not so sure. If Apple doesn't hold here, I'm not so sure it doesn't go for that 165. Right, we already took out last week's low, holding every little bit of our imbalances on the way higher too. So, okay, so let's take a look and see. Here's Snowflake. This one's pretty interesting, actually. And I'll show you. Very similar to the Palo Alto setup here. So let's go here. Snow 45 minutes. Okay. So taking a look at Snowflake here as well, we had a bullish, again, fractal, right? If we were to zoom this all the way out, clearly we are in a bearish structure, right? From this, I'm sorry, let's walk it down so I'm precise myself. So we took out that low with what price run? From that high down to that low. Again, I like to use the consecutive candles because especially here, each one of these you'll notice as just operating within my model. So for example, I'll just show you guys anyways, because I know you guys love asking questions about this one, but there it is, your low. Here's your discount retracement. There's your run for lows. My model's complete. So as we continue here, there it is, discount retracement, bearish fair value gap right here. I guess I can mark it up so you guys can all see it. There's your bearish fair value gap. There's your melt through lows. My model is complete right here at this point. So from this point, what was the price run to take out that low right there? And it was from this high down to that low. There is your 50% retracement. If I'm not mistaken, let me just make sure I'm precise. Oh, no, we didn't hit it. We didn't hit it. Okay, that's okay. So range was not set. Okay, there is your current range. Still not quite, or I'm sorry, we did get into 50%, and that's where that rejection came from. Do we put our foot in the ground and start to make that change in structure ultimately on a higher time frame? Possible. And what would lead me to believe that there's a possibility in doing that? And ultimately, if we just zoom in and take a look, we do have a bullish breaker here on the weekly. Low, high, lower, low, break above. We would anticipate that acting as a support. Very interestingly enough, you'll notice how I'm going to remove this just for a second. Ain't that something? How beautifully we're holding that bullish breaker. So I know it's nonsense, TA. I get it. It's not crazy or anything like that. But the precision is simply unmatched. So that would be Snowflake. Just just one of those setups where very similarly to PanW. I'm trying to think of some others that have had something similar to this. Boeing is another one. I know Boeing just keeps getting hit left and right with bad news. That's one that I want to take a look at too, but it hasn't given it up yet, despite that ugly move lower. So that would be Snowflake. So let me just come on over here, check in. Yeah. Okay, so I know I'm not really taking shout out now, but I did go over this one last week, so let's do it. Let's do it again this week. We're gonna go over to Adobe. So here here's Adobe, and I'm just writing it down for timestamp purposes. Did I just type in Apple? Oh boy. All right, here it is. Huh. Okay. Um, Here's the catch on Adobe. There are still a lot of imbalances down below. Did we hit 50%? Yes. Did we maintain hold of a bullish imbalance here? Yes, we did. Really, the level I'd be looking for a reaction would be that bearish imbalance. Mount that. I think we go for highs again. If we get up into it and reject, I would anticipate one of these lower imbalances to catch yet again. Ultimately, you know, I don't think this is going to be top forever. But yeah, that's a good eye. Very similar in that the only difference really is that we are not deep in discount. We just nabbed 50% bullish order block, held bullish imbalance right here. And so far, so good. But yeah, this would be the key area for me on Adobe. That would be one where I'd want to see, if I'm bullish on it at least, I'd want to see it mount. But this is another beautiful example of the breaker and how nonsensical this TA is. But here's a high, low, higher high, break down below, retracement back up into the low of that sequence. That is our breaker candle. And there it is. And there's your dump. Earnings or not, don't matter, don't care. Yeah, another one was MU. You know, we kind of had the right idea. The only difference was how tradable was it. Turns out that MU decided to move faster in this past week than it has in the last whatever 20 years it's been around, but it did so. And I guess we could just briefly run through this one, but there it is. Here's your current run. There was your run up. I wanted it here. Did we get into a discount imbalance? What is this? No wick on either side of the candle. That would be a bullish fair value gap. So we did. I wanted it a little lower. Didn't get it, but it is what it is. There's your run. Boom. Oh, whoops. That's what I wanted. Got into discount. Model complete on a run through highs at 101. So what are we currently sitting on? And at this point, let's get a range. We got to get that range to set and get going. But yeah, don't care about earnings. It still moves the way we would anticipate, I guess. So that would be MU as well. Now, I got a couple more, and then I'll take some from you guys as well. Where are we? Oh, okay. End phase. Good. All right. So I'm just grabbing the time. All right, 52. We got end phase. So with end phase, this one has been a bit of a slug, but wow, it's still holding up, still playing true. So let's zoom in just a hair here. Okay, so again, bullish breaker, low, high, lower, low, break above the high. Here's your breaker candle, right? The entirety of the candle, there it is. And ultimately, so far so good. We have relative equal highs up here at 139.65 and 138.51. We got into this bullish imbalance right here and sloppy but reclaimed. And my model completes at 139.65 on that one. The most interesting part about end phase here is this. Look at it from a yearly perspective. I know a yearly, you're probably saying, like, what the heck? A yearly? Why would you look at it on the yearly perspective? Well, I like to look at everything from every different time frame. Okay. But anyways, here it is, low to your high. Here's your discount retracement into a bullish imbalance down here in discount. And 339.92 is the completion of the model on the yearly time frame. Does this happen overnight? No, unless it's Bitcoin, then it does apparently within a year. But just encouraging to see that we're leaving that imbalance, and ultimately a win on end phase this year would be a close outside of this bullish imbalance here. So that would just be just another name I like, and one that I've been I have shares of it, but I've been in it for a while now. So that would be end phase. Another one that I want to take a look at is Mara. So we'll do Mara. Let's say Mara about 54 minutes in. All right, so All right, so looking at Mara, nothing's changed. Actually, a very nice week. So if we were to take a look, and again, I've done this a million times, but we can run through again. So, all right, first price run to take out that high right there was this low to that high. Here is a discount retracement into a bullish imbalance right here. There's a run for highs. My model is completed. Okay, so from that point, what was the price run to take out that high? And it was simply from that low up to this high. Here's your discount retracement into a bullish order block down here in discount. There's a run up through highs. Okay, here's where you get a turtle soup move. Ready? We take out these previous relative equal lows right here. There it is. Discount bullish imbalance. Check. Run for highs. Bang. On to the next one. And here I can't remove this, because if I remove it, I'll never have it again, because apparently you can't post tweets on TradingView anymore. I used to do this all the time. Just pin the tweet to, that's back in October 26th, down here at $6, whatever, or $8, sorry. But anyways, please tell me you see it. What do you see? Well, guess what? What was the price run? Or I'm sorry, in this current situation, that was there, discount retracement for your run ultimately to $19. Now, following that break, you have one more price run here. There's your discount retracement into a bullish imbalance. There's your run for highs. Okay, so from this point, that's where we currently sit, and I'll remove those and just leave this on. I don't know why it's so thick. I think I need to come on over here. And is it the font size? Yeah, I guess, whatever. But anyways, there's your discount retracement into a bullish imbalance. And at this point, I want to see it run up towards 3409. With all of that being said, how do we look at this from a higher time frame perspective as well? Because technically, this move is a bearish structure, right? Down here, you have the overarching bullish structure inside a current bearish structure inside a current bullish structure. Where's 50% or where's discount, right? That's typically where I look to, okay, I got to be cautious here. I know we're in a discount of a bearish range, and that begins at $43.28. Your first imbalance up there, $47, and then ultimately $56. And that's just kind of the way that I've played this throughout. It's something that repeats quite a bit. Again, this goes for really any name, but and by really any name, I mean every name, but it's just one that I've found comfort in playing. I know it's not a garbage company. Shout out to Captain Mara, Ryan, who's in our group. He's very into this company. So that also kind of eases it. I'm not worried about, oh yeah, this company's bankrupt, right? So that would be Mara. Now, one that's pretty interesting, and somebody brought up affirm to me. So I just want to look at this one because, despite that poor earnings performance a couple of weeks back, you're going to notice that the low, high, discount retracement, bang, bounce out of this bearish imbalance. Ultimately, we're here, bullish order block here on the weekly time frame, and we've been chopping right inside this bearish imbalance, right? To me, this is just an interesting name from the perspective of our overall bearish range is massive, right? And 50% of that range isn't until 206. I'm not saying it goes there, but just something worth noting. And even to complete my model in this situation is all the way up at $72. So that's why I'm back on this one. I am a glutton for pain because I played this run up. Made a couple bucks, left a few that ultimately went to nothing. And now we're back in discount. So just interesting. And I want to pair that with Affirm here. Whoops, not that. So Affirm is very similar in that we just got into discount of the current bullish range here. So bullish price run. Why is it a bullish price run? Look to your left. We took out this high, creating a bullish breaker. Okay, low, high, lower low, break above this high. We would anticipate the high of that sequence to act as support. So far, so good. In discount or 50%, there it is. Bullish imbalance as well. Filled up that bearish imbalance. I'm ready. So, my model here would complete a 52.48 on Affirm. So that's Upstart and Affirm. I know that they're kind of um, they are kind of aligned, I guess is the proper word. But where is that? Upstart would be at, let's say we did that at like 57 minutes. All right. I'm just trying to do some timestamps. Mara. Oh, yeah. Mark the breaker. Okay. So we have a break on Mara. That's what you're saying, Kyle. Let's see. I'll go back to it. I only have a couple left. Okay. So, so you're referring to this low, high, lower, low, break above. Hey, right off 50% of the breaker. Indeed. Good eye there, Kyle. So again, low, high, lower, low, taking out that low, shifting structure, taking out this high, anticipated acting as support. Here's your first attempt. Bing. Here's your second. So far, so good. Yeah, that's a good look. Yeah. I didn't even have that. But ain't that something? Look at that. Kyle does a great job. He's always sending me really detailed recaps and stuff like that. He's good. He's really taken the idea of, independence and being able to do it on your own, and he's run with it. And Sean as well. I know Sean's doing really well as well. So but let's see. What there was another one that I wanted to look at here. I forget. There's a couple names that really just didn't, like SoFi, just nothing has changed. Like a lot of these have just no change. It's just kind of been in the same type of boring no man's land. I know that there was one that I wanted to look at. Twilio still all right. That's also similar to a lot of the other names that we're talking about. That earnings knife into discount of a bullish range. So that one looks all right. Oh, come on. Oh, TTD. Ha. Come on. Come on. At MandoTrading, money sign TTD. Down here. So it's up $9 already. Bullish water block on the weekly. Very nice. This would be okay, just for instance, that was a previously bearish volume imbalance that we shredded through. So I would view that. I would keep that on, right? Not as a bearish level, but if price were to retrace back down into it, I would anticipate that acting as a support level, ultimately completing my model up here at $94. So yeah, that was kind of cool. It happened pretty much immediately after I sent it in there. So that's TTD. That's been a fun one. Let's just see. Let's see, what else did I want to look at here? Yeah, AI has been one I've been on. Just another one of those names, man. They're just really boring right now. Here it is. So ultimately, again, nothing has changed. Here's just one little caveat to AI. If we were just to zoom in here and we look at, again, a smaller time frame or smaller time horizon fractal here, price run that took out that high right here was that low to that high. Discount retracement, still in discount. Here's a bullish imbalance, bullish order block. Let's see how it goes. This was your earnings candle right here. So that would be AI. Again, nothing has changed, just brutally boring, just like SoFi. And there's been numerous names like that. Oracle, very solid, bullish imbalance up through previous buy side. Wonder if they're going to buy TikTok. We took out the relative equal highs and completed my model, but creating that imbalance higher, to me, that's what after my model is complete, that's kind of what I wait for. Do we get the sweep and pullback, or do we create some sort of imbalance? And so far we have to the upside there. So if they buy TikTok, just know the algorithm knew. Let's see, what else? Were there any more that I want? Oh, ARM. I wanted to look at this one. So my buddy Nobody brought it up a couple weeks ago, and still looks pretty good. So obviously that's invalid right now, but this is a bullish order block on the weekly time frame. This is also a bullish volume imbalance here. If we were to go to the daily, this is where it starts to get a little funky. So here it is. One thing I don't really love is the relative equal lows, but besides that, I guess you could say, low resistance liquidity run up here, 146, 148, 149, and then ultimately no imbalances on a higher time frame until 164. What I'd currently be, or what I am currently looking at is, okay, individual price run to take out that high here was from that low to that high. Okay, I'm not going to chart it out, but you have a bullish fair value gap here, which is in discount of your most recent little fractal, and you also have that bullish volume imbalance that we came into and left to close out the day. This is a bearish imbalance up to this point, so I'll map that out for you right here, right there. So above that level, that fills your bearish imbalance, and from there, again, to me, on a higher time frame perspective, this is a low resistance liquidity run, meaning that there's no imbalances that we're really dealing with in the meantime. So yeah, this is just a really, really a nice one that I'm going to keep on watch. The only thing that I hate about this really is just we couldn't have just took out that low. If we took out that low, I would have felt much better about it. But it is what it is. So that would be ARM, pretty good. So weekly did not get into discount, but again, the weekly discount retracement has not come since October. So how do I get my friends to quit trading junk? Just let them do it. It's a winless battle, man. They're never gonna listen. Nobody will ever listen about anything. It's all good. And it's really not our job to tell anybody any of that, anyways. If they want to do it, let them do it. I'm with you completely. It is what it is. But honestly, people trading stuff that if they found it on their own, it's different. Following it on Twitter, it's like lame. But just wait. All those boys are what's it called? All those boys from Atlas got off the hook. So I don't know if they're gonna be allowed to trade or not. But if they are, just wait. You're gonna see a lot of people who just want the easy way out, and then ultimately will not be around for much longer. The sad truth of things. I'm in another Discord and was laughing at dudes getting turtle soup on lower time frames, taking puts. Thanks for that knowledge. Yeah, isn't that crazy, right? I used to always think of it that way too. When I was first getting going, you're like, oh, it took a low, it lost support, it's gone. There's a reason why they call it dumb money retail support. Those are typically the best or most swift moves in the opposite direction, just to take their money. That's usually how it goes. All right, let's see. I'm gonna just, if I see anything on here that if it's not something that I've already done, I might just move on from it. But we could look at that SoOn, unless it's a penny stock. If it's a penny stock, I'm not gonna. SoOn AI. Oh, cool. So we have done this one. Okay, so it actually completed my model the last time we looked. So ready, low, high, discount retracement, bullish imbalance, run for highs. Let's just confirm so we can be precise. Oh, yep, right to the tick, 476, right? Oh, no, it didn't. No way. 477. It didn't take it. That's good. If you're bullish on this, that's good. Because if you were bullish and we hit it, you would be looking at this and there's no imbalance down here. Ugly, not ideal. But now check that. Okay, so we did hit 50% of an overall lifetime bearish range, and I'm not sure if this ever split or anything like that. Nah, it's relatively new. Okay, so it didn't split. You don't have a bearish imbalance anymore, right? You've taken them all out. You took liquidity here as well. Yeah, that imbalance down here in discount. This is a bullish order block, so I guess you could justify price bouncing from this point. Not something that I use per se. Have I seen it happen? Yeah, I'll show you an example on Boeing because I'll pull that one up next. Somebody asked, but yeah, this is an interesting one because it's AI. I didn't Katie would know this. Katie, who's in doing something with these guys? Is it Apple or something? I forget. I'm just gonna keep an eye on this one going into next week. That's why I have that written down. This would be so ideal, but again, there is a weekly bullish order block on a $6 stock, so I don't know if that's gonna give us a chance, but we'll add another alert there just in case. And oh, look, I had the last one here; it never came for it. 346. But anyways, I'll show you BA here. Hold on, where's that so on? And let me just pop this down. Whoops. Okay, so this is at like one. Well, let's say we talked about that one at like, I don't know, 108. And now we'll go to BA at 110. So again, obviously every possible poor news headline that could come out about something has hit on BA. But look at it from the weekly perspective here. And again, this is just an example of the weekly bullish order block working. Again, not really something that I trade off of, but just for reference, here was BA on the last run from your low to your high, discount retracement into a bullish setup, aka this bullish order block, down close candle followed by an up close candle that took out the open of the previous. There's your run for highs, completion of my model, and that's where we currently sit on BA from this low up to that high. Doors fall off the plane here. Over here you had that guy, you know, whatever he did to himself. I'm not going to say it. I think I'll get kicked off YouTube. But anyways, yeah, so this is where we currently sit. This hole, believe it or not, is a pretty good one. Hold inside that final bullish imbalance here on the weekly time frame. If you're bullish, you kind of want to see it get going, but I'm not really sold in either direction ultimately. But that would be Boeing. I just wanted to show you that example here, and I know somebody asked about Boeing, so yeah, better setups. Let's see. COF. Yeah, let's do COF. Katie, I did NVDA. We'll look at Frog. Yeah, I know the plane thing is crazy. Need to watch the imbalance video again. Yeah, it's on there. I think that one hit 1,000 views too, which is cool. Probably because people are like, what is this dude talking about? And let's look at MO. So I got 3 left here. We'll go COF, MO, and Frog. All right, let's do it. Let's do Frog first. I don't know what the heck this is. Okay, so Frog. Oh, and Wavelength had one. I'll do that one. Wavelength. Yeah. Okay, equal highs up here. Bearish order block. Justification for that rejection for sure. Let's just see. You do have a pretty big range on this, but look, ready low to high, discount retracement, bullish imbalance right here. Hold on. Ding dong. Turtle soup took out that low. Bing, gone. Okay, so that would be one. My model completed there at 30.98. Now to the next. No discount retracement. And obviously big weekly range. If we go back historically and look at this name again, I'm not familiar with this. I guess it just IPO'd in 2020, but currently structurally bearish, which it's really going to come into play here. So we never retraced into discount, which is good to know. But ultimately 50% of that bearish range is at 55, and you do have this bearish imbalance right here at close to 50%. So that would be Frog. So yeah, I mean, if I had to, not really ideal up here for me personally. just because I like the discounts. I mean, we can look at it on the daily and see if anything is different. It looks kind of similar. Okay, actually the daily completed right here. So hold on. Ready, low to high, discount retracement, run for highs. Okay, there's one. And now we would go from here to here, discount retracement one more time. And so far, so good. All imbalances are filled. You do have this bearish order block, which we rejected here. But you got that bullish imbalance right here on the daily. So if you're looking at it from a really tight fractal, right? What was the run that took out that high right here, right? And there it is from low to high. There's your discount retracement. And my model on the smallest of fractals here on the daily would be the 46.65. Ultimately would complete at 48.81. So that would be frog. Okay, so the next one was COF, then MO. And then we'll do the one that COF, MO, and then ABT. Okay. So 115, let's do ABT. All right. We'll go ABT first. Sorry, I already wrote it down. Okay, so Abbott. Okay, beautiful. Oh wow, really larger time frame bullish Mando model setting up here. Turtle souped it already. Run up for this high to shift market structure on a smaller fractal bullish. Here's your what was the price run to take out that high from this low to that high. Why wouldn't I use this high? This is chop garbage, and each time you're retracing into discount essentially prior to making that move higher. But Abbott, let's see, you have a bullish imbalance here. You have these are discount bullish imbalances at least. So do we see discount? Maybe, maybe not. You are working on this imbalance right here that we closed in. And then you got that right there as well. So, for some, maybe for me, again, I would rather get it in discount even on this most immediate run. Ultimately, I think it's going here. But that would be Abbott. So let's go over here and take a look. We're going to look at MO, and then we'll do COF. So MO, this is Altria if I'm not mistaken, and we did this at 116. Okay, I'm just doing this so that when I post it later, or if somebody wants to go back and see, they can do so. All right, MO. I'm not sure if I have this one charted or not. Actually, I have shares of this, but has not been super smooth. So anyways, here's MO. I'm just trying to pick let's see. Okay, so this might be one very similar to yeah, okay. So this dates all the way back to 2008. This is nuts. Okay. So hold on, ready. Let's whatever. Honestly, you guys are here, right? It's Friday night, nobody's doing anything. We'll do it. It'll be funny. All right. So if we just to go through each one of these little price runs, okay. What was the price run to take out that high right there from this low to that high? Whoops. There it is. Discount retracement. Nope. There's a discount retracement. Bullish imbalance. This was a bullish order block. Ready? Let's just zoom in and we'll just show effective. This is back in 2008. Okay. Just so everybody knows. Okay. There it is. Discount retracement, bullish order block, and run for highs. Okay. Model's complete. We took out that high here with what price run from this low to, was that the high? No, we didn't take it out there. Okay. So from here, no discount retracement, no discount retracement, no discount retracement, no discount retracement. Whoops. There it is. Discount retracement, run for highs. Check. Okay. What was the price run to take out of those highs there from that low to this high? Okay. No discount retracement here. Okay. Bullish order block on the weekly time frame gave us that bounce. There it is. Discount retracement, bullish imbalance. Check. There it is. Run for highs. Model's complete. Okay. On to the next one. Now we're in 2011, boys and girls. Still works. I don't think you can do this with anything else. Okay, so there's your little run. This is sloppy garbage. Did we take out highs in this immediate price run right here? We did. We took out that high. But There's your discount retracement, bullish imbalance, 50%, beautiful, run for highs. Okay, cool. So now, oh, whoops, let's move that back. Let's come back over here. There it is. Discount retracement, run for highs. Ain't that something? We're still in 2011. We're going through discount retracement, bullish imbalance. I don't feel like mapping out all these bullish imbalances, but I'll just do it anyways, I guess. There it is. Run for highs. Beautiful. Okay. There it is. Okay. Run for highs. Look for each one of these red candles. You can draw two. There it is. Discount, bullish imbalance. Check. Whoa. That was a little sloppy. There it is. Run for highs. Model's complete. Okay. So there it is. Low to high. No discount retracement. There it is. Discount retracement. Relative equal highs. Comes back for it later. There it is. Boom. Okay. There it is. Our next. We are now in 2013. We're making moves. This is nonsense. This TA is nonsense. Okay. Here it is. Discount retracement, bullish imbalance, run for highs, models complete again. All right, and I think this is where it gets funky. I hope so. So it's easier for us. Yeah, there it is. Okay, good. There it is. No discount retracement. Go to each one of these highs, and ultimately, you're going to notice that we don't retrace into discount, right? There it is. No discount retracement there. None there. We'll keep on moving. Hold on. There it is. Whoops. Okay, let's keep moving. No discount retracement. No discount retracement. There it is. Okay. Finally, we get a discount retracement right here. And we're deep in discount. We actually take out this loaded turtle soup. And so far, this is where we're currently sitting at. So that was just a flashback in time. But currently where we sit, let's go. I'm just looking at this. Oh, whoops. I got to zoom in. I hate when it does this. Okay. Low, turtle soup, discount retracement, bullish imbalance, run for highs. Done. Okay. Here it is again. Whoops. Discount retracement, bullish imbalance right here. Volume imbalance, run for highs again. Okay. There it is again. Low to our high, discount retracement, bullish imbalance, check, run for highs. We actually have a bearish market structure on this company. There it is. Low to high. Failure. Oh, man. My model failed. So that's a loss. So you're right, Joe. It is nonsense. But anyways, we took out the slow right here with that price run. Discount retracement, bearish imbalance, dumper. Beautiful. Okay, here's your next. And this is where we currently sit on this bad boy. If you believe in the company, do we shift market structure? Because, honestly, most things are rigged to the upside long term. But here's your discount retracement. There's your puke through lows. Beautiful. My model's complete to the bearish side there. So what was the price run that was used? And we have relative equal highs up here. Okay, what was the price run directly that took out these lows right here? So we can simply do it like this. What was the run to take out that low? From high to low. Discount retracement. Oh, failure. No. Here's the shift. So you do actually have a bullish market structure, and you do have bullish imbalances down here in discount. So we got relative equal highs up here. That's kind of where I think it's going. Takes forever, obviously. Look at this name. We went back from 2011. We barely moved. So that would be MO. All right. Yeah, MO looks solid. All right, let's look at COF and 4, and then I'm done. So let's go 4. Oh, we did this one before. I knew it. Okay, there it is. We shifted market structure there. Price runs higher, fills up this final bearish imbalance right here. I've never even heard of this. Okay, there it is. Discount retracement right at 50%. Bullish order block right here. Okay, and you have a bullish imbalance. there. Okay. So you're deep or you do have deeper imbalances down here in discount. That's the only tricky part. And you do have this bearish weekly imbalance right here. So ultimately, it looks fine. All like long term, all time. There's your turtle soup right here. Whoop. So we set relative equal lows. 4 weeks later, came back for them. And that's when you get the whole shift. Run for highs. So yeah, we're right in discount right now. So for me personally, I prefer them deeper in discount, but this would technically play. This is 50% bullish imbalance. So, all right, last one. COF. Okay. Whoops. All right, so that's our price run. Have not retraced into discount at all. And that's where we're at. You got 143.99 and 144.73. You do have relative equal highs here. So do we snipe that and retrace, or do we snipe that and go get some of these highs up here? Which is these would be low resistance liquidity runs. We have one more untouched bearish volume imbalance up there. But beyond that, there's not much holding back except this. The rest of this, I should say. We got into it. We haven't filled it yet. So that's COF. So yeah, so I think that's all I got right now. So for anybody who's been here, appreciate it. Thanks for sticking around. And you know, I'm only gonna do these once a week, I think. So on stream at least. But that's all for now. If you haven't already, please subscribe, like the video. If you're on X, share it, comment, whatever. We appreciate it. So I will talk to everybody next week. Enjoy. You're welcome. Yep, you got it.